You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, welcome back. It is that time once again. It is Monday, May 13th, noon Central, 1 p.m. Eastern. That means it's Option Block time. It's time to dig right into some craziness. The game is afoot out there in the markets today. And I was telling these guys before the show, it seems like the administrations here in the U.S. and indeed over there in China, they're conspiring to give us great fodder for the Option Block program. So we thank them, even if perhaps your portfolios may or may not be thanking them, depending on how you're lining up out there. But if you're spooked, don't worry. Stay calm. Listen to the Option Block. We got you covered. My name is Mark Longo. We'll be joining you here for the next hour, regaling you with all sorts of fun stuff in the world of options. And to help me do just that, we got a great cohort of crazies starting off. Let's go all the way out to the quiet, tranquil little hamlet known as St. Charles. Where first up, I am joined by Uncle Mike Tussaw himself from the appropriately named St. Charles Wealth Management. Uncle Mike, how go things in this maelstrom of madness that is today's market, sir?
Why, is something going on today in the markets? I didn't see it. Can you guys fill me in, maybe?
I could do this alliteration for days here. I can just go on and on. You might want to stop me.
Yeah. No. All is well. Exciting times for potential opportunities.
Exciting times indeed. Let's see Uncle Mike the Perma Bull. If he's saying all is well, there you go. You can relax, listeners. All is well. All is right with the world. Also joining us from out in the hinterlands of Maine, where I do believe they have a little bit of internet connection. I think he's the only guy using it out there. At least that's what the Google data shows us. We are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital. Mr. G, how go things as we're rolling on into the big Trader Summit next month?
I think things are rolling well for my ball newsletter, all that kind of stuff. Things are rolling. And I think the Chinese have learned about Twitter. The Chinese government functionaries have learned about Twitter. That's what the theme of today's show is.
The Chinese have discovered Twitter. I like it. They said, hey, it seems to be working well for this Trump guy. Why don't we try this Twitter thing? And yeah, because everyone knows the best way to conduct international economic policy and trade negotiations is via 250 characters or less. That's the way it's done. That's the way the big boys do it. and,
just slam it in Twitter and see what happens.
So, yes, always good to see major international negotiations carried out 250 characters at a time. And joining us, holding down the Fidelity hot seat, it's going to be a hot one, a squirmy one today. Hopefully that seat is not too uncomfortable. It's the return of the last emperor. I actually did see the other last emperor this weekend, Fedor, the famed Russian MMA fighter. He was over here in Chicago at an event. That was kind of interesting. So 2 last emperors in the span of a couple of days. I'm a fortunate fellow. Konstantin Vrandopoulos from the strategy desk over there at Fidelity. Last emperor, welcome back to the program, sir. I like saying that even more because I know it's making Trey and everybody else over there just super jealous.
Thank you, guys. Appreciate you having me back. Definitely an exciting day. Market is down 2.68% in the S&Ps. I was looking at the action on Friday into the close, and one thing that I noticed was the fact that the market was led to go positive by utilities, materials, staples, and real estate. So definitely had a little bit of a defensive feel. VIX wasn't sniffing it out. It didn't feel like. Had a 16 handle, which implies what? About a 1% daily move, and here we are down 2.7%. So yeah, a lot of things going on for sure.
What does VIX know? We say that all the time. What does VIX really know? At the end of the day, what does VIX know? I guess we'll find out. These days, at least, not so much, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, let's get to it. Konstantin kind of kicked us off there. Market's not exactly liking this exacerbation of tensions between us and China here. China announcing they're going to go tit for tat here with the tariffs this morning, and the market's just taking it on the chin. Pretty much all the sell-off we saw last week, listeners, that we saw everything off 1.5%, 1.25%, somewhere in that range, and then we rally all the way back. Then we did it again on Friday, and we rally all the way back. Well, all that's coming out again today. Most of the major indices off that much combined, and probably a little bit more. S&P off nearly 2.75% right now. Dow off about a similar percent, right around 2.75%. NASDAQ off 3.5%. That's just a bloodletting. 280 handles in the NASDAQ, about 78 or 80 or so in the S&P, and over 700. Everyone likes to quote the Dow on the major outlets because it sounds so cool, 700 handles, but still just madness across the board. Oil coming off a little bit as well, off about a handle. WTI down to about 60, a little bit shy of the 61 handle, actually. And gold, as you might imagine, up a little bit, up about 1%. Not maybe as much as you might hope, but back up over that magical, mythical 1,300 level everybody likes to watch. And, of course, our old friend VIX Cash kind of making up for lost time. It was back over the it was, as Konstantin alluded to, it was under the 20 handle substantially not too long ago, and coming into today and popping around 5. Let's see, how high do we get intraday here? 2086 seems like it was pretty much the high out there. Actually, no, we got about 21. We got 21 even not too long ago before kind of coming off a little bit. So 21 even, up, about 5 or so handles from where it was towards the end of at least vol views last week. And then, of course, coming in now, it seems like looks like a little bit shy of that 20 handle, right around 19 3/4 are still fairly rich. The futures, I think you could charitably call them backward, and the cash leading that dance. Let's go back the opposite of the way we came. Let's go back to, since we're talking VIX, let's start in that VIX mecca known as Maine. Mr. Rock Lobster, a lot lighting it up, I'm sure, in the pit chat there. What are the crazies up to? And how goes your funky time vol strangle you put on last week? Seems fairly timely, sir.
It definitely is fairly timely. If some of the puts that I bought got lifted on Friday into the close while they were closed, I love it, the dime away where my stop doesn't get filled. It would have been a home run early, but as it stands right now, it's making money. So that part is fine. So it's working as it's designed, and now I get on with trying to, I've got some offers out for some call spreads. And, as vol goes up, you just sell them. Let's just try not to get, I've gotten in trouble before trying to think, the vol will go up forever and everything will be great. It doesn't always work out that way. But yeah, I think we actually saw the 15 handle briefly on Friday.
Remind our listeners very quickly which strikes and months you were working.
Remember, this is not a recommendation, but it was the May 17, 2030 call spreads for $1 and the May 31 VXX 29 puts. I think those were $1.50. So as volatility goes up, even the vol of the VXX put goes up. So the idea of that trade is you try to close some of your call spreads and then and sell them out as vol goes up. And we'll see what happens if the vol ever comes down again, and hopefully the VXX puts come in, and then you get kind of the double whammy. That's where you make the big bucks, getting to close both sides on the vol move. So as of right now, I'm just concentrating on the one side that I can close, which is the call side. As far as VIX goes, like we alluded to earlier, the Chinese have learned to use Twitter. They're saying, we're going to sell bonds, and you know what? Like basically now I think the things that are selling U.S. government treasury bonds anyway. So they have like a $400 or $500 billion annual deficit with us in trade. What are they going to do with all their dollars? Like the whole point of this is the trade deficit is too high and you guys have too many dollars. So, and then I guess they're just going to dump their dollars and get really angry at the U.S., I guess, for we're buying all that stuff of theirs. So I think hopefully there's room for some compromise, but who the heck knows what's actually going on. But as of right now, the market doesn't like that. I don't think the market really liked the ruling against Apple either. I think that was like a 1-2 punch today. I think we would be down some, but Apple's down quite a bit actually on an open liability of they're overcharging people in their app store for apps. How are they going to figure that out?
Oh, people not liking people pushing back finally on the 30% that they've been charging for years now.
I guess so. I mean, they have a store and you want to buy it's like one of those. Is anybody getting forced to buy stuff in the app store? But I don't know. I think Kavanaugh needs to he wrote the dissent, so he's trying to help create some liberal bona fides or something. Who knows? But anyway, if you don't like the App Store, you can like the Google Store. But it is possible that you guys have to. People want a little bit more flexibility in the App Store. So who knows? Either way, though, Apple's down $10. I mean, it was just trading 205, actually 213. So they took. No, they didn't waste any time taking it out of the company. And with a goofy open-ended liability like this, who knows where Apple can go, really? I mean, what? So how do you do an aggrieved class when somebody pays $3 for an app and they're charged 20 cents too much? I think it's a great deal for the lawyers.
The lawyers will find a way. Trust me, sir. You'll get an email or a letter in the mail. Have you bought an app in the last 10 years? In which case, join our class. You'll get a check in the mail for $1.42. The lawyers pocket $400 on your behalf. It's a good deal.
It's a good deal. So, I guess so. And how it actually goes to trial. So I guess it can go to trial and they can argue over 10 cents or 20 cents or whatever it is. I always think like the app developers could have a bigger, but isn't it like anything where you have a store and you charge a markup for it? I'm not quite sure what's going on. And if people don't like the App Store, they go to the Google Store or some other store to buy some other app somewhere. So I don't know if I guess some Apple user was complaining. But anyway, as far as vol goes, I think that was the 1-2 punch. What I will say, though, is that the VIX futures, if you want to learn about trading volatility, of course you can. But but the VIX futures are trailing this move up. I think pretty substantially, to be honest. The May future is not over 20 yet. So, earlier there was a little bit more a lag between the cash and the future, and now that future is starting to catch up a little bit more. So, I mean, for all intents and purposes, you have a very unstable curve, meaning VIX is the highest thing on the board, and the May future is the next highest thing. The cheapest future around is the DEES for 1805. So generally, that's kind of like, that's not a happy curve. This is more like a short-term vol event, and as far as vol future traders are going, there's definitely a little bit of nervousness in there. So, and that could mean as much as that we could be back up, 7 or 8 SPY handles tomorrow. Who knows? But as of right now, I think we had the 1-2 punch. Like the case against Apple, not good for the tech and Qs, and also, just the fact that China's trying to, throw all these balloons out about all this kind of stuff that mostly are going to hurt them worse than us, to be honest, because, they've got dollar-denominated debt. We just sell more. So it's a weird one, but in order for us, we're not in zone 4 yet, by the way. So we're still not there, which is really when things get crazy. So anyway, I'll stop talking about vol, but it's definitely we'll just call it, we're not in the danger zone, but we are in the uncomfortable zone.
Not quite monkish, not quite danger zone. We're getting a little sweaty, a little uncomfortable. That kind of Constantine squirming there on the hot seat there in Fidelity land. But yeah, I like that. It's not a happy curve, not a happy VIX curve. You're right, it is not happy. I've been saying for ages that the long end of the curve is the screaming deal in the vol space right now, and that is certainly the case today. As we've seen for a while, they haven't been pricing in a lot towards the end of the year there, and that's always why buy July or Aug when you could go all the way out to DEES for like a couple of cents more? It always seemed strange to me, and that's playing out here in the marketplace today. Let's see, we got. If you're spooked by all this, don't worry, we got a perma bull here, and he's ready to talk you off the ledge. Uncle Mike, sir, talk to our bulls out there, make them happy, share your joy, sir.
There is plenty of reason to panic. I think everyone needs to run for the hills right now.
Oh, no, I'm cutting your mic as we speak.
No. I look at today in that it's part of things like not necessarily this specific event was expected, because no one can ever say that, oh, I expected this. Well, I guess if you put your money where your mouth is and you got short on Friday afternoon, you expected it. But events like this are to be expected in the marketplace. And not only are they to be expected, they need to be respected. And what I mean by that is that pullbacks are a very realistic part of any bull market. And the fact that we are still just maybe a few percentage points away from all-time highs in the S&P 500 is something that I think everyone needs to keep in mind. With that being said, we hit the all-time highs 12 days ago. So we're 12 days away from the all-time highs of the marketplace on May 1st. So it's kind of hard to believe that 12 days ago I was saying my never before in the history tagline. So that's one thing that I think it's important to remember when looking at this, in that we're still fairly close to where the all-time highs are. Now, the other thing that I think is very unique about this market, in addition to the new age with which we live, where Twitter's playing such a valuable or such a very prominent role in world trade negotiations, is the fact 2,800 or 280 in SPY. I remember a few years back on the show, it seemed like every day I kept referring to 2,000 on the S&P as the magnet number, meaning that it would go above it a bit, go below it a bit, but it seemed like we were always ending up around the 2,000 mark in the SPX for what seemed to be an eternity. And I would say if you look at a chart of SPY or the SPX over the course of the last year, you'll see that we have spent a lot of time going above and below the 280 mark or the 2,800 mark, depending if you're looking at SPX or the SPY, and we're really kind of in another magnet-style market. It's just that this time it's a weaker magnet, so to speak, and that when we go up a little bit more, and we go down quite a bit more. So with that being said, I think it's important that we keep this in perspective of where we actually are with the overall marketplace. Now, with that being said, the fact that this is a Twitter pullback today, I don't think anyone could deny that. These are things that are being said on Twitter. All of a sudden, if things go down enough, then magically we're going to come out with a deal. And this is my opinion, then magically we're going to come out with some type of deal with China. The liberal news media will say how Trump got screwed over. The Republican news media will say how it's the best thing since sliced bread. And the market will likely go higher because they'll like hearing it. I think that is ultimately how this is going to end. Now, when this is going to end, who knows? But I do know that if Trump is putting himself out as the business presidents typically don't look good when markets go down. And so I don't think he's going to allow the market to come down when it's something that he can control with world trade policy, at least at this stage of time. So I think that in the near term, we definitely need to be very cautious by all means. But overall, what is the ultimate reason why the market is coming down over the course of this last week or so? And well, that's because we're in trade negotiations, and negotiations can change at the drop of a hat, and so can this market.
Yeah, I've kind of wondered too about the visual element of that, being out there, putting yourself out there as this business first, economy first type, administration, and then very much through your own actions derailing a lot of at least what people broadly view as economic health, which is of course the performance of the market. They don't look at a lot of things like GDP and a lot of the underpinning, mechanics that really drive the economy. They just see the market is kind of a broad surrogate for that. And so when you're seemingly undercutting it all the time, I do kind of wonder about the visual of that. But then we got some time left before the voters head to the voting booths here. So this could all be forgotten in a haze by the time the votes are counted next year. Constantine, bring us up to speed, sir. I'm sure a lot is coming across the tape in Fidelity land right now, but what is lighting up your desk? What are people calling up the strategy desk about today? What are they slinging over there in Fidelity today, sir?
Yeah, gentlemen. So definitely a lot going on. Wanted to talk about some of the top ones that are claiming the leaderboards. Believe it or not, Uber is number one by orders from Fidelity customers today. Had a rough go of an IPO day, I guess a debut day on Friday. I think it priced at 45, opened at 42, closed the day, on the lows basically. And I think the 45 was the high tick of the day on Friday. Here we are today, trading right now at $36.89. So down 11% in addition to what we saw on Friday. Obviously, no options on Uber yet, but that's something to look forward to. We've been seeing a lot of IPOs in the last couple of weeks, so this is another one. And, in sympathy with Uber, Lyft is down substantially again. The second one on the list is Apple, and I know that we've talked about Apple already. Obviously down 6%. It's was the largest market cap company in the U.S. Biggest part of the S&P, of course, and down $12 is a pretty big move in Apple. So definitely something to be reckoned with. I think from the technical standpoint of view, this 185, 182.5 area is interesting from prior levels of resistance that then acted as levels of support. So here we are again testing that 185. We'll see if it holds this time around. The one that caught my eye I wanted to talk about in a little greater detail was actually Roku, and the reason why is because it doesn't normally make the list by orders of Fidelity customers, but it did today. It's number 14 here, and it's pretty even on the buy side and the sell side. Down about 2.4% right as of the moment. Was actually higher on the day, was bucking the trend earlier when the S&Ps were down 55, 60 handles. And I guess it just couldn't withstand the pressure. So We're down on Roku right now, 2.3%. This is a name that I found interesting in, kind of this controversial time of IPOs, right? It went IPO in September of 17. I think it opened at like $15.75. Currently trading, at $80. So that's what, give or take a 420% return over the couple of years that it's been trading. So pretty good return, I guess, for those investors who were long. It surprised the street, obviously, with the most recent earnings report. That's something that I was paying attention to. It reported on the 8th. I think it was going into the print at around a 64 handle. Straddle was pricing an $8 move, and it moved $18 to the upside. So it was a 28% rally into last Friday. So looks like it's finding a little bit of supply. Definitely is trading at those highs right now. The all-time high was made on Friday at around the $86 level. The options markets are pretty busy in here, and I wouldn't say that they generally trade a lot of volume, but today traded 70,000 contracts already, which is surpassing the 90-day average. And the front month, the monthly May 17, 85 and 90 calls are pretty active. 85 and 80 puts are fairly active as well. So that's something that caught my eye. Thought that it was worth a mention.
Interesting. If I had picked, on one hand, the names that would be leading the dance over there, I wouldn't have probably picked Uber off the top of my head. But this has to probably go down in retrospect as some of the worst timing for an IPO in recent history. I don't think it was you, Constantine. It was one of your other cohorts there in the strategy desk last week on the show. We're actually maybe speculating that they might even try to delay it because it just didn't seem like good timing given all of the trade war kind of just poised over its head on Friday like a sort of Damocles. Not a good time to potentially be launching an IPO. And I kind of mentioned I don't know how much flexibility they have at that point once it's all set. And apparently they didn't want to pull it or weren't able to because they launched into the teeth of this maelstrom, and I'm sure they're probably regretting it now. Uber off nearly 5 handles again today, or about 11.5% down to shy of the 37 handle at this point, about 36.88 or so out there. So yeah, it's been rough sailing out there for coming into what do they launch at around the 42 level or so, and then up to 45 or close to it, 44.5. And that was kind of the peak out there. Actually, 44 3/4 was the peak on Friday, right around 130. And they pretty much never looked back since then. It's just too many headwinds. On top of the other things, Lyft has performed poorly, lost $1 billion last quarter. We talked about those things before. So there's a lot of madness out there. And let's just, it was perhaps unfortunate timing to launch a major name that doesn't really make a lot of money on top of it. That never helps either. Let's look really quickly, because we are going to go along in the trading block, but there's a lot to talk about here today, listeners. Let's look really quickly. Top 10, Constantine kind of broke down what's lighting it up at Fidelity. Let's look at the broad market here. Top 10, number 10, NVIDIA, $122 on the tape. Number 9, Amazon, $124 right now. Netflix, number 8, 129,000 contracts on the tape. Number 8, what we got? Trying to see number 7. 10, 9, 8, 7. There you go. Facebook. No numbers on my list for some reason. 144,000. Number 6, Micron, 162,000. Number 5, good old Alibaba, 174,000 on the tape. Number 4, Tesla. Tesla lighting it up. Let's see how they're doing really quickly. 203,000 contracts on the tape. Number 3, Bank of America, 211,000. Number Dose, AMD, 222,000. Number 1, yet again, you guessed it, the fruit company, nearly 600,000 contracts on the tape today. Just tearing it up. The biggest bias actually coming in Baba, 72% of that to the call side. Let's look really quickly because I do believe they have earnings. Let's scroll down here really quickly. Yeah, Baba is coming out here. And we have actually, if you check right now on the website, listeners, we do have their earnings move report here available for you for free, courtesy of our friends over there at ORATS. If you check it out here, you'll see Baba. Their earnings are on the 15th before the bell. Right, coming into the time of this report, they were at 178. I don't know where they are right now. Probably, spoiler alert, probably a little bit lower than that. But at 178, they were pricing in about $6.50. That's almost exactly in line. They were pricing in $6.48 in previous year straddles, so pretty close to in line. Let's see, historically, actual move they've delivered is right around $6, $5.93. So it's all pretty close to what we've seen lining up before in the same quarter in the past. They've delivered 6.25 in terms of moves. So all pretty close. It seems to be lining up fairly well. We've also got some other names. Take Two here, 103. They're pricing in about a $7, actually $8 straddle, which is about a buck rich compared to what they priced in the past. They're announcing today after the bell. And then we got our old friend Pags, a.k.a. Pag Seguro. They're, let's see, 27.5. They're pricing in 261. In the past, they've delivered 345, so a little bit low for our old friends Pags. So interesting stuff. Macy's on the docket this week. Nvidia on Thursday after the bell, kind of seen very much as a crypto bellwether. And spoiler alert, crypto's moving like crazy too. If you're into that and some vol in the crypto space, stay tuned. In about exactly an hour, we'll be going live with the crypto rundown. It's up 2,000 handles since our last show. Crazy town here across the board here, listeners. Speaking of crazy, it's time to get a little crazy, time to get a little weird. It is time to get on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That music means it's time to get funky, time to get weird, time to get wild, time to get into the Odd Block. We were looking before, talking about the earnings that are popping off this week. One of those tickers leapt out of me. I was like, Pags, that one, why does that one ring a bell? Didn't we talk about that one recently? And we did. It's our old friend Pag Seguro Digital Limited, ticker symbol Pags, P-A-G-S. Trading today, 26.16, off a $1.30, nearly 5%, so feeling the heat out there like everybody else today, even a little bit more than the rest of the market. But if you're wondering, didn't we talk about his name not too long ago? We did. It was back on March 25th, where we talked about, looks like some pretty sizable at the time, call love out here in PAG. So let's get to it. At the time, back on March 25th, and let's look here really quickly to see what this name was trading at back on March 25th. It was trading at 28.91, so 2.75 handles higher than where it is right now. We saw the June 32 halves lighting it up 10,000 times. Really big trade for this name. Pretty much gobbling up the offer, devouring it for $1.35. So a lot of paper going up. Clearly it was opening. At the time, there were earnings. There still are earnings on the 28th here. This is 28th. This must have been updated because we have PAGs on our list now. Maybe they've now updated. Let's see. They're saying here now earnings are the 14th. So at the time the trade went up, they were expected to be the 28th. I guess they've adjusted that since then now to the 14th. So that's going to play a little bit of havoc with your options timeline here. But again, we saw size paper opening on these June 32 halves. Let's go dig into the flow a little bit, see what's been going on out there. And that was the big trade that's gone up in this name pretty much since we talked about it the last couple of months. In fact, they did total of nearly 12,000 contracts on that day, so another 2,000 piled in, bringing the OI up to about close to 12,000, so most of that was opening. And this pretty much hasn't dropped since then. It's around 11,000 right about now as we speak. So these calls, spoiler alert, still open. Hasn't really worked out for our friend. Today's move, of course, not helping. And this position has lost roughly a half to a third of its value. If he had to hit a bid right now, he's pretty much out. He's down to about a third of it left. He's lost 2/3 of the value there. But we'll be charitable and say he can get it out for close to 60 cents, which he can't. So they're 40 cents at 60 right now. So this guy's out 2/3 of his money. He was a little optimistic. Let's see if he had any opportunities since we talked about it. No, that March 25th was kind of close to the high. It popped up a little bit, but almost 2 handles after that trade went up. So it got up to about 30, almost 31, 30.61. And that was pretty much the high, and then it kind of hasn't really looked back since then. Got down to actually lower, got down to 25.30, so these calls were actually looking worse. So he had an immediate opportunity to take them off for probably a little bit of money or a scratch. Clearly didn't want to do that because these bad boys are still open. And now, Mr. Rock Lobster, it seems like our friend out there in Pags land is perhaps regretting. He still has time. These still are out to June, so he's still got another month or so. So all things could happen. But right now, premium-wise, he's got a lot to make up, does he not, sir?
He does. He does have a lot to make up. And I believe I think you just like putting this in because you like saying Pags.
Who doesn't like saying Pags? It's just fun. Yeah, it's just fun to say.
He picked a bad week to buy calls. But also look at the little birdies in your Skype window. So just in case, I know you to get all the news and information that's available. But
I'm so busy here doing 18 things.
They're not feeling the love right now.
So busy doing 18 things. I don't have time to provide you with information. Who has time for such things, sir? I got shows to do. I got things to handle. You want information. Look how this
Listen,
give you a glimpse.
CEO of a global information conglomerate. I know some things can slip under the cracks sometimes.
give you a glimpse into my life, listeners. Everyone's just so demanding all the time. Everyone wants this, everyone wants that. It's just crazy town. Let me get this to you right there. We go. You should have it. I think I want you to log in. So let's not do that instead. Let's do that, and we'll add you there. There you go. All right. Check your email, sir. It should be all sorts of fun. Let me change all this so that anyone could play, not just me. There we go. Yeah, I like having it limited to just me, but there we go. All right, that's better. Now here we go. This is fascinating radio, by the way, listeners. Blame the Rock Lobster. He's so demanding. So demanding over there. That should be working now. Why is that not working? Well, you should have a link. You should be able to check it here as we go on to our next name. Here, I'll just type it in for you. How about that? That way you could see what the heck we're talking about. All right, MYL is our next name, listeners. This is everyone's favorite, Milven NV. In case you're wondering, this is a global generic and specialty pharmaceuticals company. So go figure, pharma, biotech kind of lighting up some unusual activity. News at 11. This is we see these on our list quite a bit. This is today's activity, by the way, list. This is not a review, so these are what's lighting it up today. The stock not lighting it up, off two handles and change down to about the 20 handle there, off nearly 10% here today. So not a good day here for this name. There we go, trying to get to my producer. There we go. All right, perfect. And here we are here coming in today. Let's see what lit it up today, though. Again, $20 and change. This is the name that was not a year ago, was trading double that pretty much, right around 40. And then spiked up to, looks like about 41 and change, 52-week high, 42.5, coming around, looks like early, midsummer last year. And then it kind of has been vacillating, mostly trending to the downside, 31, 32, getting down to 26.5 before rallying back up to 31.60 in February, late February, then kind of coming off again. And then lately they must have just had earnings because they were 28.25 a week ago, and now they're down to 20. So not exactly good days here for good old Mylan NV. I'm guessing a disapproval there somewhere, maybe with the FDA or something along those lines. That's usually how these things play out here in the biotechs. But let's see what was lighting up our options tape here. All right. Let's see what we got. We got OCT20. So it's call side. Even though the stock's taking it on the chin, we got calls lighting up the tape in a couple of different lots. Looks like somebody really wants these bad boys, too. First off, we saw 5,000 of these OCT20s lighting it up for $2.85. This is through the offer. They're offered at $2.80. They're $2.72 at $2.80. This guy gobbled them up for $2.85. He said, I want them now. Give them to me for $2.85. I'll take them off your hands. And then that wasn't enough. He came through a little bit earlier to get some first at $2.76, which was right below the offer. He got 4,300 of them then. And then he came back. He wanted 5,000 more a minute later. He said, I'll tell you what. I'll pay through the offer to get the rest. So he did over 9,000 of these bad boys today, most of them on or through the offer. So somebody wants these bad boys. Mr. Rock Lobster, we got October out of the money calls, actually at the money calls right now, actually. So someone may be taking advantage of a drubbing they think is overdone to load up on some nearly $3 calls. So we need a nice little bounce on this bad boy, but it's been beaten up. So what do you think? Spending $3, so a decent chunk of change, close to $3, on a $20 name to go out to October for some at the money calls. What's your spidey sense tingling about this one, sir?
This is I'm looking at I follow some of these little generic drug makers like Teva and stuff like that. The whole pharma group is getting pretty demolished. MYL, that was like a $36 stock a year ago, actually 6 months ago or 6 months ago, and it's $20. I mean, they're just this is either the best buying opportunity in pharma or all across the board. Because I think the market is really reassessing what the pricing potential is in the U.S. With insurance and this. I think people are starting to, I guess, rearrange the deck chairs on the Titanic, I guess. Like, okay, we're going to just sort of do all this. I've been like poking my feet in the water with some of these. Definitely down some money on TV. I think my average price is like $16. I did better just trading the strangles, being long strangles in it, to be honest. Ever since I started buying the stock, I started losing. So I don't know where the bottom is in any of these things. But all I know is the prices are getting pretty low. Teva is a $12 stock. It used to be a $90 stock. Mylan is another one. Take your pick. Gilead's another one. There's all kinds of them. Some are generic, some of the generic drugs, some aren't. And they're just, I think, as usual, they're getting nailed. So I think this person just like, okay, I'm going to come in, I'm going to buy the dip. And I think I'm going to get some really cheap calls. Again, to me, this is the smartest way to buy calls. If you are a buy and hold investor, you buy some time, a call you think that can go well in the money. And I think they're using the option leverage to see if we can get out of this trade problem, because October clearly is a long way away. And considering their trade deal was supposed to be done last week, they want to make sure they get enough time to enjoy the fruits of their Mylan purchase.
Let's see who else is enjoying those fruits here. We'll wrap up really quickly here for the rest of the odd blocks. We got more segments to get to, listeners. A lot going on in the market today. Really quickly, our final name here is Cummins Inc., ticker symbol CMI, off 6.5 handles today, nearly 4%, down to about 159 even out there. So the name that's kind of been all over the place over the last year. Got up to nearly 170, down to 124.5. I guess you guys can probably guess when that was. That was actually not exact. Actually, it was exactly when you thought it was. It was Christmas Eve, pretty much like everything else. So it's up since Christmas Eve. It's up 35 handles. So that's been a nice little run. Let's see what we've got here. It looks like someone may be thinking they've hit a top here, going up, blasting out 5,000 of the June 170s. So near term upside calls for $113. Looks like it's right off, pretty much, right on the bid or close to it. So this looks like you're pretty much standard overwrite. Going on out there trying to get a little bit of the old risk premium here. And I guess if the stock hits 170, they're probably not sad, because that is pretty much the 52-week high right there. So it looks like your old equity size underlying holder writing out some primo. Meanwhile, we have to write out this segment and keep on rolling. It's time to get into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. It's a good day, I think, to talk some strategery, because I think we all could use a dose of it on a day like today. Uncle Mike, when you trade options, you could buy them or you could sell them. Or I guess if you listen to my interview with Thomas Petterfee, it went up on the network recently, you could hear that you should only buy options. That's my bad impression of him. He's not a fan of selling premium, at least of having his customers do it. If he had his way, he'd sit on his porch and he'd buy out-of-the-money calls and underpriced names all day long. That's what he wants to do. So Uncle Mike, sir, regale us. Downside, upside, literally and figuratively, when I want to buy and sell options, sir.
Well, there you go. I think that needs to be a good mix of both. Personally, I think that it's kind of like the book of Ecclesiastes. There's a time for everything. I think it's also like the song by the Byrds in the back in the 60s that was after Ecclesiastes. And turn, turn, turn. There is a season. There's a time to buy, a time to sell, a time to be short, a time to be long. Or maybe I changed the words of that song a little bit. I'm not sure. But I think there's an importance of doing all of those things and having balance. Now, there are people that do say, I'm going to quote one of our good friends, you're either selling options or you're not selling options, but you're never buying options. And there's people on both sides of it. I want to explain the advantages and disadvantages of both a little bit and kind of tell you a little bit of the things that I like to look at when doing such things. There is no inherent advantage or disadvantage to buying or selling options. Now, there's times that you're going to be right to be a buyer, and there's going to be times that you're going to be right to be a seller. No question about that. But where I'm going with this is that I've been at this for a long time, And I've never heard anyone come up with one way that's the only way to go, because if that were the case, then that's all everyone would be doing. There would be no one making money on the other side of it. For those of you football fans out there, is it better to throw the ball or is it better to run the ball? Well, I don't know of any NFL team or any team anywhere that's ever won a Super Bowl or won a championship by only throwing the ball or only running the ball. Yes, there was a time in the 70s and early 80s where the triple option was doing really well and teams could actually score 40 and 50 points by just running the ball all the time, but that time has passed. And ultimately it does. Football is a sport of balance, and like that, option trading is a business of balance. So with that being said, when should you be a buyer? When should you be a seller? Well, when you feel that vol is low, you need to be a buyer. When you feel that vol is high, you need to be a seller. Now, here's what I mean by that. Now, let's say that you believe that vol is low. Now, vol is low. What I mean by that is that means it's going to go higher. And vol is only low if you think it's low. So with that being said, the VIX is at, let's say, 12. Does that mean vol is low? Well, if it's going to go to 9 the next week, no, vol is really high if that's the case. But if you believe it's low and it's going to go higher, then at that stage, well, maybe it might not be a bad idea to be an option buyer. See, whenever you buy any type of investment, whether you're long, short, or whatever, you're saying that the rest of the world is wrong. I know that sounds kind of scary to hear, but that's what you're saying. You're saying, I'm right and the rest of the world is wrong. This instrument is mispriced. I'm buying the S&P at 2,800 because I think it's going to go higher and it's not priced correctly right now and it's going to go higher at some stage. Or I am buying Apple at 190 because I think it's going to go higher. Or I'm selling Amazon or selling Apple, whatever the case may be. You're saying that the rest of the world is wrong. And there's no difference in that than with options. Now, with that being said, if you believe that vol is high, you believe that vol is going to go lower. Now, I've told this story on the show many times back in the fall of 2008. I can remember I was doing a joint presentation with Jim Bittman of the CBOE out in Las Vegas. And they had these new options that were coming out. It was this totally cool thing at the time where you could actually trade options on the VIX. And so I remember I almost missed my plane because people were so convinced with the VIX at 39. Well, the VIX is way higher right now. How do we buy? Mike, what are some strategies of what we can do to maybe be short the VIX right now? Do we maybe buy some put spreads? And so Jim and I went through a bunch of scenarios in our positions at the time. We couldn't give any recommendations on being bullish or bearish on it. And so with that, I remember just kind of going through what some basic strategies were of being bearish on the VIX. Now, I hope and pray that those people didn't actually follow through with those strategies, because shortly thereafter, for those of us people that were around at that time, the VIX was at close to 80 very shortly after that time. So at that stage, was volatility high? No. The VIX was at 39. Volatility was low at that point in time. Now, that's a very unique stage of time, but you still have to have an understanding of what that can actually be. Now, at times, if volatility is low, by being low, you might feel it's going to stay low. So let's say that the VIX is at 11, and you feel that volatility is low, but you feel it's going to stay low. If that's the case, and I'm just using the VIX as one example, there's a lot of other volatility measures to look at of individual underlyings, specific options, things like that. I'm just using the VIX as a general example. But if, let's say, the VIX is at 11 and you believe that, well, I think volatility is going to stay around the same area. Yeah, it's at the lower end of the spectrum, but I think it's going to stay that way. Well, if that's the case, then perhaps it might not be a bad idea to be an option seller because of the fact that, no, you're not getting a lot of premium, but you still don't think the market's going to move any. Or one thing that I've looked at through the years, over the course of the last 2 years, that's been very weird for me, but I've been an out-of-the-money call buyer, and we've done fairly well with that. And so by doing that, I've looked at the market and said, okay, let's say that volatility is lower, which it was, and with that, let's say that the market goes higher. Well, I can make money off of that because I'm going to be long these call options. And so with that being said, the market goes higher, we made money on it. ultimately my risk, what I felt my risk was that, all right, if I'm wrong and the market stays the same, at some stage I'm going to have to do some type of a scalp, whether I'm selling a put spread here and there, or whether maybe I sell a call on top of that, or do something to mitigate this time decay that I have going against me. What I liked about that scenario was last fall. Last fall, I actually felt that the market was going to go higher, which shows what an idiot I am, because obviously I was dead wrong. But here's the beauty of options, and here's the beauty of call buying. My thought was, okay, we've been having a good year last year, which we did, and probably around October, I'd have to look to see the exact date. I felt, all right, if the market does go higher, which I believe it will, I'm going to benefit from it, and my clients will benefit from it because of these calls we're buying, these out-of-the-money calls. But if the market does go down like, I don't know, maybe like 15, 20% over the course of a month or two, I mean, well, what's the likelihood of that, right? But let's say it does. Well, we still have a very good year because all I have is these out-of-the-money calls on the table. Well, sure enough, it did. I was dead wrong in my market sentiment, but I was on the ball with my risk management. And because of that, because I used options in the way with which they were meant to be used, I managed risk with them. We were still able to have a very good year last year with the aggressive, and I'm referring to the aggressive section of people's portfolios with which I'm trading. It actually worked out very well. Even though I got my face ripped in with those out-of-the-money calls, I didn't have that much of my face on the table to get ripped in. And that's one of the benefits of buying options. Now, let's say that you're selling options. You really don't get that luxury. If you're an option seller, then at that stage of time, I'd have gotten smoked. And so whenever you are an option seller, if you are leveraging it in some way, shape, or form, you have to be very careful in terms of knowing when you're going to get out. And we've talked about that at times before on the show. Now, with that being said, the year that 2015, that was actually that's been my only losing year with this strategy. And maybe the 10 or so years that I've been doing this, that was a year to where the market barely moved, but we ended up losing money on the year because I was too much of an option buyer that year. So with that being said, and with being the option buyer, time decay ultimately bit me. So with that being said, you need to have kind of an understanding of how you would use each side of it. If you're an option seller, understand that if you're a leverage option seller, meaning you're selling a put spread on a stock and you don't have all the, you're not totally cash secured, or maybe you're doing a put spread and you're leveraging a little bit. With that being the case, you got to have an exit plan. If you don't have an exit plan, there is an exit plan that's already been preordained for you by just the world of options as we know it. And that exit plan is that you're ultimately going to end up blowing out your account, in my opinion. Might not happen the first month, it might not happen the first year, but it will ultimately happen at some stage if you don't have an exit plan. Or some type of risk management plan. Let's say you're not putting all of your money on the table, whatever the case may be, have a plan. If you're an option buyer, have a plan for how you can manage risk with time decay, with volatility going lower. What is your plan for that? How are you going to account for that? And at some stages, maybe doing a little bit of selling in a buyer's world. That might help you. So hopefully that helps everyone. But with that being said, make sure that whatever you do, whether you're an option buyer, an option seller, or like me, a little bit of both, that you have risk management put in place. I know I've said this on the show probably close to 800 times at least, because that's how many episodes that we've done. But risk management has saved my career. I don't know how many times, and I'm sure Andrew and Mark can say the same things. And I can't emphasize that enough. And risk management has helped us prosper through the years, and that's why we're still here. And so that is the strategy block for today on this kind of dull market. Just kidding.
Very quiet, very dull market. So dull, no time for your questions and emails today, listeners. We have to keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. A lot of stuff on our dockets this week. Still, in addition to all this macro madness that is catching us up here and just catching headwinds for everything out there in the space, there are still a lot of earnings popping off this week. I mentioned a few at the top of the show. We do have NVIDIA on Thursday. We have after the bell, Walmart before the bell. On Wednesday, Cisco closures, Uncle Mike Cisco after the bell. On Wednesday, Macy's before the bell. On Wednesday, and a bunch of other names popping up there. Here we got today after the bell. I already talked about them. That was, friend, I believe, is it PAGS today after the bell? After they're the 14th. They are the 14th after the bell, so they are tomorrow. But a lot of names still popping off. Alibaba popping off here this week as well. So a lot of names. Macy's Take-Two coming out here later on today. I believe they're the one popping off today. So a lot of names popping off this week. Let's go back to the hot seat. Constantine, sir, a lot of things to keep an eye on this week. What are you watching this week from the Fidelity hot seat, sir?
I'm certainly keeping an eye on Baba as well. 15th before the market. Obviously Chinese company down quite a bit over the last few days. Kind of in sympathy, I guess, with the broader Shanghai indices there in China. Options are very, very active in there today. I see a lot of trades going off through the offer and through the bid. So we'll have to keep an eye out on that one. Prior to Baba reporting, I am going to be looking at the Chinese industrial production numbers that are coming out on Tuesday night, 10 p.m. Eastern, 9 p.m. Central Time. The prior reading was 8.5%, which was way better than expected. So you had quite a reaction in the Chinese markets that actually followed through to the U.S. They were expecting around 6.3% this time around. So we'll wait and see on that number going into the Wednesday open here in the U.S.
All right, and back around the horn, same question for you, Mr. Rock Lobster. A lot going on, Monk Zone, Danger Zone. Where are we? What are you watching for the rest of this week of volatility, sir?
I am looking to see if Zone 4 we get there, but that would be too good for me at this point, so I doubt if it will happen. That's because I'm an old, grizzled type trader who just has bad superstition issues. So I think we are just at an elevated wall for a while. It's going to be this choppy on again, off again, China thing, and it's not going to go away. I think the pharma issue. I think there's a couple of pretty big class action suits are, that's more uncertainty for the market. So they're not liking those either. So I'm just seeing how all of this stuff plays out. I don't think it's a time yet to sell vol. I think overall relative, vol is certainly not overpriced yet. I mean, if the SPY can move $7.50 in a day, it can do that tomorrow. So you have to be a little bit careful about how you want to make those vol trades. But I think things are still going to be moving, and a lot of stocks all of a sudden look, there's potential, bargains. And I'm not sure if Apple, if it's like a place to step in or not yet, but it looks like it's getting there. And as far as everything else goes, I'm sort of like watching, waiting, and seeing, and just mostly just trading the position I have, getting rid of some of the long vol that I have, and seeing what else we get. I'm not jumping through any hoops yet.
And last but not least, Uncle Mike, sir, what are you watching on this crazy, crazy week, sir?
Well, I mean, I'm just watching to see if we can hug this 2,800 mark in the SPX, seeing how close we can stay to that, for one, or seeing if we bounce off of that. I really do believe that's a key number, as I discussed earlier. And, of course, watching the macro events, I think that's just what's trumping everything. No pun intended. I think that's what's trumping everything else at this stage of time. With everything with which we're doing. So that's what I'm looking at.
All right, listeners, that music means we have to get out of here for today, but stay tuned. Keep your beverages ready. We'll be back in about 20-odd minutes, 25, 28 minutes or so. We have to rejigger a little bit here. We got some guests coming up for crypto, so we'll have to rejigger. Unfortunately, no stuff in between. You're listening live, take a break, come back in about half an hour. We'll be ready to go. Before you do that, let's go back around the horn. Let's start back in the hot seat. Constantine, the listeners are intrigued by what you're talking about here. They want to maybe learn a little bit more about what's cooking in the land of Fidelity from an options perspective. Where should they go? What should they do, sir?
Most definitely. We'll be glad to hear from you. Fidelity.com/options. If you would like to apply, open an account here. If you already are a Fidelity customer, of course, you can give your service team a call and request an appointment with the strategy team. We'll be glad to go through your situations one-on-one with you.
There you go. The easiest way to find all that good stuff, Fidelity.com/options. It's pretty easy. It's all there. You can sign up for an account. You can check all the tools, the commissions, all that stuff. If you do that, or maybe you call up the strategy desk if you're a Fidelity client, you ask for the Last Emperor, tell them we sent you. Or if you ask for the Last Emperor, I think he'll probably know where you're coming from. But outside of that, tell them we sent you. They'll be excited to hear that. And let's keep going around the horn. Uncle Mike, sir, if I want someone to hold my hand during these scary market moments, where should I go? What should I do, sir?
By all means, we are a firm that is in tune with the Beatles. I want to hold your hand. Contact me. Go to my website at stcharleswealth.com. For more information, would love to work with people. We're still taking new clients for the time being, and love to have you.
I got to imagine these are boom times for St. Whenever the market's dipping, Uncle Mike is popping. So give him a call over there. Head on over to stcharleswealth.com to learn more. And last but not least, Mr. Rock Lobster, sir, people want to come, have you hold their hands in person at your upcoming Pro Trader event. Where should they go? What should they do, sir? Uh-oh, he might have muted himself, listeners. In which case...
I didn't mute myself. I swear, I didn't mute myself.
There he is. Liar! Liars. Lies abound here.
You know what? It's lies upon lies. That's what the deal is. So you get to go to our website and go to events. Events, our Pro Trader Summit. Be there or be square. OptionPit.com. It's June 4th through the 7th. And yes, you get to go watch Mr. Longo eat a steak on Mark Sebastian, which is always the highlight of the trip.
Curious. It's fantastic, listeners. I encourage you to check it out for yourself. OptionPit.com to learn more. And on behalf of the Rock Lobster and Uncle Mike and the Last Emperor, I want to thank all of you out there for downloading, streaming, subscribing, for joining us live. If you are listening live, like I mentioned, take a break, maybe do some trades, check your portfolio, come back in a few minutes. We'll be back here in about 25 minutes or so to kick off Crypto Rundown. Spoiler alert, huge moves out there. 2,000 plus handles in Bitcoin. Everything else moving like crazy. Dogs and cats living together. Mass hysteria. We'll be back here in about 25 minutes to break it all down. Otherwise, we'll see you back here next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.